Post-market analysis, Nifty 50. Hi friends, welcome to our post-market analysis. In our morning prediction, we called for a flat to positive session for the Nifty. Today, the index closed at 25,237.15, down just about 58 points, a 0.23%. So, while we didn't get the green close, the market essentially traded in a flat, range-bound manner with a slight negative bias, which is very close to our flat call. Let's now dive deep into the charts to understand exactly what drove this price action, how the key levels played out, and what it tells us about the market sentiment for the days ahead. Coming to the day's price action or prediction recap, we can see the index opened near the 25,250 mark and spent the entire day oscillating in a relatively tight range. The chart clearly shows a series of lower highs and higher lows, forming a bit of a compression or a coil. There was no strong directional momentum. The bulls lacked the conviction to push higher, and the bears were unable to stage a significant sell-off. The volume profile also suggests a lack of strong participation. This perfectly explains why our flat to positive call was half right. The sentiment was certainly not bearish enough for a big fall, but the buying pressure we anticipated to push it into positive territory just didn't materialize. It was a classic case of indecision and consolidation. Now, this is where the real story is told. Let's bring up the detailed support and resistance chart. The key takeaway here is that the market respected these predefined levels beautifully. The battle at the top, the immediate resistance R1 was at 25,307. If you look at the intraday chart, you can see the index made several attempts to break above this level but failed each time. This became the upper boundary of today's range. The next cluster of resistances, R2 and R3 around 25,387 to 25,487, were never even threatened. The stability at the bottom, on the downside, the crucial support S1 was at 25,132. The market dipped a couple of times but found solid buying interest around these levels, preventing a steeper decline. The low of the day was 25,123.35, which is almost a perfect tag of the S1 level before bouncing back. This shows that the bulls were actively defending this zone. So, today's entire trading range was essentially caged between S1, which is 25,132, and R1, that is 25,307. The close at 25,237 is almost right in the middle of this range, further confirming the indecisive, equilibrium state of the market. Coming to the key takeaways, so, what does this mean for tomorrow? A day of consolidation. Today was not a day of trend, it was a day of consolidation and digestion. After the recent moves, the market is pausing to catch its breath, waiting for the next catalyst. The range is king. Until we get a decisive break, we must trade within this range. The boundaries are clear: bullish breakout, a sustained move above 25,307 R1, and more importantly 25,387 R2, is needed for the bulls to regain control. The next targets would then be 25,500 and beyond. Bearish breakdown. A break and close below 25,132 S1 would signal weakness and open the door for a test of the next major support at S2:25 0.42. Market sentiment. The fact that the market held the key support and didn't collapse is a mildly positive sign. It tells us that the underlying bid is still there. However, the inability to climb higher indicates that there is significant overhead supply. The market is, quite literally, at a crossroads. Coming to the final conclusion, in summary, our flat call was validated by the price action. The Nifty traded in a tight range, respecting the key support and resistance levels we had identified. For tomorrow, keep a close watch on 25,130 on the downside and 25,310 on the upside. The break of either will dictate the next short-term direction. Thank you for watching. If you found this analysis helpful, please like this video, subscribe to the channel, and hit the bell icon so you don't miss our daily pre-market and post-market updates. Leave your comments below on what you think the Nifty will do tomorrow.